People had stupid expectations. And the consequence of that is that there was a class of speculator that owned the narrative they were right, and they lost patience. It's really, truly silly. I mean, the uranium business, the fundamentals in the uranium business get better and better and better and better and better. And the people around the story have invested in a 5-year narrative, and they have a 3-month strategy. I mean, those people get exactly what they have coming, which is to say nothing. Uh, the structure of the uranium business is in great shape. For the first time in my life, we have the tailwind of public support. I mean, you have the head of Greenpeace saying the only hope we have for continued prosperity with a nice environment, this is Greenpeace, is uranium. Uh, we have a U.S. administration that's gone from trying to make it a felony to subsidizing it. We have Japan yesterday with the largest shutdown of nuclear capacity in the world, saying Japan's energy future includes uranium. There's nothing like Japanese restarts to impact demand tomorrow as opposed to 7 or 8 years from now.
Hmm.
We're building nuclear plants worldwide. We're having very, very high quality counterparties like Microsoft say to the nuclear power industry, we will finance your restart. And if we can get access to 24/7 power, we will buy that power at double the prevailing power rates. At the same time, the structure of the industry is going from the tyranny of the spot price to the stability of the contract price. And when I say this to audiences, people who are new to uranium, their eyes glaze over and say, when will the share prices go up? You know, there's really no helping people who are that stupid.
In the uranium market, spot prices have been replaced by the stability of long-term contracts, signaling a massive opportunity. But most investors are blind to it. Rick Rule explains that despite uranium's fundamentals strengthening daily, investors are trapped in a short-term mindset, asking only when share prices will rise, with global giants like Japan restarting nuclear power and Microsoft financing 24/7 nuclear energy deals. The groundwork is laid for explosive growth. Yet those fixated on instant returns will miss out on what could be the most undervalued asset of our time.
You forgot one, which is reality.
Hmm.
When the increase in the uranium price and the ability of companies to utilize the term market to finance projects that they otherwise wouldn't have been able to finance. And when the stability of margins in the bigger companies gets established, that's when the generalist money comes into space, when the industry legitimizes itself with performance. The billionaires are there, Antonio. I've spent a lot of my life talking to very large family offices, and I'll talk to very large family offices today, although I'm retired about various topics. And rather than me steering them to resources, they're steering me to resources. You know, saying, okay, Rick, we get the theme. We're here because we care about uranium, or we're here because we heard you say that the market share of precious metals and precious metals related securities is 0.5%, while the 4-decade mean is 2%. And we are right exactly there. We understand the mistake and we want you to help us fix it. The billionaires are in place. I mean, really, truly, the billionaires are in place. I think, well, the crypto coins, you have to ask yourself if they have any uranium. Rather than being backed by uranium, they're denominated in uranium. Um, that's a scam. Okay, let's get that straight. That's a promise to pay. If you don't understand their balance sheet, if you don't understand their ability to pay you, they can't pay you. So let's get that one out of the way. I really think that rather than trying to understand the industry from a one size fits all perspective, that you need to go back and take a look at yourself. What's your time frame? How much risk are you willing to assume? And how hard are you willing to work? For me, the for me, Rick Rule, as an investor, not Rick Rule in Rule Investment Media or anything like that. For me, the upside is looking at deposits that the market thinks can't be financed and trying to analyze the issuer's ability to forward sell in the contract market enough material with an investment grade counterparty that they can get the deposit financed. George Soros said he made his billions by finding a widely held public perception that was wrong and betting against it. There is a widely held public perception right now that a lot of these junior projects are not financeable. And for 10 or 12 projects, that's wrong. Now, only half the projects are large enough to interest me, which means that there are 5 or 6 projects worldwide that the industry doesn't think, or not the industry, pardon me, but the investing public, including institutional investors, don't think are financeable. I think they are financeable. Owning those and then being proved right is an awful lot of fun. I've had it happen to myself a few times in my career. And what happens is, even if they don't finance them, even if they're taken over, there's dynamic tension in the process. Everybody now is looking for takeovers, but everybody believes that these projects couldn't be built by the issuers themselves. And so they look out and they see who could take them over. Well, Cameco, if they're in Canada, maybe Rio, maybe BHP. But the truth is, if Cameco, Rio, and BHP believe that they're the only bidders, they're going to be constrained in terms of the price they pay. If the company then announces that they've secured the financing for the project and they don't need Cameco or Rio or BHP, but Cameco, Rio, or BHP, just as an example, want that project, then they have to pay up for it. You don't have an auction if you only have one bidder, right? But we're coming into a circumstance in the uranium business where the management teams, whether or not they should, are going to be able to finance these projects. They're going to be able to go to Westinghouse, which is now part of Cameco, and say, we would like you to build this project on a turnkey basis. We will pay you too much to build the project, but we want to guarantee that you bring this project in on time, on budget, or else you pay. They're then able to take that contract to investment grade counterparties, Ontario Power, Southern Company, Duke Power, China General Nuclear, Tokyo Power, and say, you see, we're guaranteed that this project is going to be built on time, on budget. So we are going to be able to guarantee you product beginning in 2028. And we'd like to enter into a long-term contract that specifies within ranges the amount of material that we can sell you and the price that we're able to sell it to you at. This doesn't occur in any other commodity in the world. There's an arbitrage in place now in uranium between the cost of capital and the return on capital employed that's off market. And nobody, I mean, the fact that it took me 5 minutes to explain it says that the narrative isn't going to enjoy widespread circulation. When a lot of people at conferences hear this explanation, their eyes glaze over and say, so when are the stocks going to go up? Those people, I'm afraid, are my natural and normal victims. I'm, sort of a pawnbroker to people who employ a long-term narrative with short-term strategies. But I think the next-gen deposit is a deposit that the industry believes couldn't be financed by next-gen. It may not be, but it could be. Fission can easily be financed by fission. As an example, understand, I want 100 million pound plus deposits. I'm not interested in 20 million pound deposits. But I think the production hub in South Texas that UEC has can be financed without an industry big brother. I believe that the production hub that they have in Wyoming. Not that they're great deposits, but the industry doesn't perceive that they're financeable, and I believe that they are financeable. Uh, to the extent that the Australians would remove the vestiges of the three mine policy in Australia, there's a couple deposits in Australia that would be able to be financed. And I think that the deposits in Africa, probably, uh, that might be a little riskier because you would need to add in a point and a half, 150 basis points in political risk insurance to your cost of capital to build deposits in Botswana, Namibia, uh, Tanzania, never mind Niger. But those deposits, I think, could all be financed by the juniors. Whether they will be or not is a very different circumstance. But I don't think that there's one uranium adherent in 100 that understands how the structure of the uranium market has changed and why that's profound.